Good afternoon, all. It is our pleasure to invite all of you, and Nilesh sir also will be joining in few minutes. And before he joins, I just want to have one small poll to understand what's the mood of the all investor in terms of India economy perspective. Sanjay, can you run the poll? Yeah. So the question is, will India attain the aim of US 5 trillion by 2027? I think before session itself, we are getting it where India is heading through poll. I think that's what is showing that how as an investor having trust on the India economy. Okay, we'll just wait for a minute and see the final result. So okay, we'll end the poll now. So I think result is showing the what is our thought process. So 93% have a view. Yes, we will be a 5 trillion economy by 2027. So this is something which really showcase that how India is changing dynamically. And I think the one of the best thing today, what we have seen that if you look at India and Singapore today have done where UPI level, some anybody can do a fund transfer between India to world level with Singapore. So that shows that the type of changes which is happening at an India level, which is completely non-imaginable. If I look at the way changes are happening. So to give some of the example, if you look at the one of the most precedent change, if you look at which is happening in India, the scale at the base at which it is happening. And if you look at all the three pillars which structurally link with the growth, one is the social, economical, and the political. All three pillars are showing sign of growth altogether. Just to give an example on social side, see if you look at today we have 1.4 billion human resource, out of which 1 billion is below 35. That is something which is working very well for us, and we are getting a demographic dividend through this. The second, if you look at on the political side, today we have 960 million registered voters, out of which like last election 600 million voters have voted. You will be surprised to know that out of 600 million voters who have registered, 90 million were the first time voter. So that is something which is bringing the change in the India, and that is something which is building the new India. So these the first time voters are the one who is the aspirational India, who is looking at something which is completely different what we have seen earlier. The third part, if you look at from an economy perspective, the economic changes. If you look at today, we are 3.5 trillion of economy. We have taken almost 67 years to reach 1 trillion of economy. But if you look at after that, how we have changed. Next 8 years, we have reached 2 trillion economy. And if you look at the third trillion, from 2 to 3 trillion, we have just taken 5 years. So that is the pace of change of what India is seeing today. That's the reason why people are seeing and talking about that this decade is going to be India. And there are certain theories where people are coming back and saying it's not this decade, even the century is going to be for the India. The way structural changes which is happening into the India, and especially on all the three fronts, be it social, economical, and the political side. Second thing, if you look at from the economic perspective, pre-COVID and post-COVID, we are the fastest growing economy. So even during the crisis time, one thing which has changed that India has become much more stronger, and China plus thought process has helped India to build the manufacturing base also. So that's another change. What we are seeing on the structurally also that across the world, people are looking at India as an alternative to the China. And if you look at from 2015 to now, so we were 10th economy. If you look at from a GDP level at 2015, from 10th economy, we have reached now to the fifth largest economy at a GDP level in just last 7 years. So that is a very rapid change if you look at in terms of how our economy has grown. And it's just a matter of time we are going to be a fourth largest economy. So which means we have reached a very large milestone in terms of the GDP growth perspective. And the one of the most important part, if I look at what shows the sign of a growth for India, I think the one of the major part, if you look at from the FDI perspective, see for any economy to see that the growth is more sustainable or not, FDI investment is the first and truest indicator to show that how the economy is growing. So if you look at on the FDI flow perspective today, we are getting it highest ever FDI inflow. And you will be surprised to know that the FDI flow which is coming currently, it is coming across almost all the sectors. So 61 sectors where we are getting the FDI flow, and almost 31 states who are getting benefited from the FDI flow. So that's another change what we have seen this time, that the growth which is coming up, it is more inclusive in the nature, and it is more linked with bottom to up. It is not only the 4 5 states which predominantly do well if you look at from the growth perspective. And that is something which is showing that how India is going to change. And two more factors, if I look at what is going to work for the India. One thing which I think people will be able to realize over a period of time, we are going to be 20% of world growth over the next 10 years. So India will be leading the world growth, and the overall projection is that we will have 6 to 7% type of growth over a next 10-year perspective. And the next question come, what are the things which are going to lead this growth? Because everybody is have a belief and trust that yes, India will grow. But if you look at the factors which are going to drive the India growth, they are changing, and that is something which is making us our growth more sustainable. The first and foremost thing, if we look at from a growth perspective, I think offshoring and investment in the manufacturing. So if you look at the current form of manufacturing, like companies like Apple and other, where they are doing a contract manufacturing, where the larger players are coming up and giving on the contract manufacturing, and then coming their own. So that's another change, that contract manufacturing becoming a very large part of the manufacturing base. And if you look at some of the sectors where we have not thought of, like for example, mobile phone. Today we are doing export in mobile phone. Same way, if I look at on toys, people have not thought of that India will be exporting toys. So India is becoming very competitive in many of those manufacturing sites where earlier nobody has thought of it's going to happen. And if you look at the major reason why this change has happened, so one is we have our own domestic market which is doing a consumption. Secondly, from government side, they have done large things. So if you look at, one is on the tax cut, they have done it. Secondly, the PLI scheme, where that is called production link incentive, where they are giving the incentive to the manufacturing sector for some of the segments where economy level they are looking at on the high growth side. The second thing, if you look at which is going to build the growth for India, is the energy transition. You will be surprised to know that going forward perspective, if I look at the energy perspective, the majority of the growth which is coming on the energy side, 70% of that is going to come from the alternative energy, which means we are changing the way energy sectors have looked at. And the second thing, almost all the villages today have electricity, which is a big change if I look at in terms of the inclusive growth perspective. So that is going to transform the overall or energy consumption. So if you look at today, we consume almost one tenth what US consume in terms of the electricity consumption perspective. So that way we have a huge headroom for a growth in terms of the consumption perspective. And secondly, or focus on alternatives energy that is going to help us to build more sustainable growth from the future perspective. The third and the most important part, I think, which is driving the whole growth for the India is the digital infra. Today we are the world highest data consumption country. Today the data what we consume is higher than what India, US and China combined together consume. That shows that how India has changed over a period of a time from where we were at 122 number. If I look at 2015-16, today we are at number one in terms of data consumption perspective. The second change, if we look at 41% of world real-time transactions, thanks to the UPI technology, the way India has used Aadhaar with using the technology or linking up with the UPI, 41% of world real-time transactions are happening in India. Secondly, if you look at last 1 year itself, we have done almost 48 billion transactions. And you will surprise to know last 1 month itself, we have done almost 9 billion transactions. So the pace of growth at which we are converting ourselves into a digital economy, which is changing on a multi form. And that is something which is helping us to do things which people have not thought of. Like today, like eKYC, DigiLocker, eSign, all these combined together, helping many companies to do the things which used to take like almost 20 to 30 days. Today, somebody can set up a company in a day times because the whole digital infrastructure is ready. And if you look at the next phase of digital growth, there are three major things which is going to happen. One is OCN, which is Open Credit Enabler Network, through which government is trying to make all the institution have a single control of the data, and lending can be done at a much more lower rates because all the institutions will be able to share the information at a common level. The second thing is the ONDC, which is Open Network for Digital Commerce. So today, all those large players which have a monopoly on the digital commerce side, they are going to see that how this open network is going to change the whole way of doing business. The third thing which is going to happen, the digital health ID, wherein government is trying to build a whole health infrastructure through which most of the ecosystem level companies like health insurance companies and the other players, they can design the products based on the health data of individual. So if you look at today, India is building a whole network of data which is linked with different ecosystem, and that is something which is going to drive the whole growth. And the some of the facts, if you look at, which is already showing the sign of change. So, for example, if you look at recently, India is buying oil from Russia, and they are selling back to US and Europe countries. And that is something which is showing the sign of power what India have as an economy level and how they are able to use their overall economics to build things at a next level. Secondly, I think the one of the major factors which is changing is the way villages from or 1/10 of our population which is moving from village to urban areas. So if you look at every minute, there are 30 people who move from village to city. That itself will going to build a huge infrastructure base across different cities to develop the new level of a growth. So the point is, if you look at from all the parameter perspective, to summarize, I think on the social side, economical side, and the political side, all the aspects are showing that next, not just this decade, the century is going to be for the India, and we will be able to see the real growth, because now the aspiration of India has changed. So now people are able to look at the way things are, their wants. And the best example, the unicorns. If you look at the number of unicorns, which earlier time, so in 2021, we used to have almost like in 29 days one unicorn. So it almost 1 month we used to have one unicorn. 2022 we had in 9 days one unicorn. Today, if we talk about every day, India is coming up with one unicorn. And if you look at the number of unicorn at a world level, India have a highest. That shows that the power of economy and how things are changing, and how a startup India or digital India, all those efforts of government plus as an individual level, how all working together, which is building a new wave of a growth. And that is something which we can see same way in our equity market also over a period of time. That if you look at from a next 10-year perspective, everybody have a view that India will going to be the best economy in terms of which can give the best returns, if I look at from a next 10-year perspective, because the real growth of economy which will end of the day will show in the equity market also over a period of a time. I think that's all from my side on the overall economy perspective. I'll just see if Nilesh sir has joined now. So I would like to just give, I think he don't need any sort of an introduction, as he's well known at a industry level, and he's the one who made the whole change, how people see the investments. Like he always talked in the common language where people can understand. And just to give an intro, I think Nilesh sir lead the team to Best Fund House of the Year award for all mutual fund where he worked, be it Kotak, ICICI, Franklin Templeton. Nilesh sir is a part of member of Economic Advisory Council of the Prime Minister. He is a member of Board of Association of Mutual Fund, and he's also president of Chamber of Commerce and other parts. So we would like to invite sir, and sir, we would wants to have your view that how India is going to grow in next one decade, and how as an investor should plan overall investing thing. Then maybe we can have some questions. So we would like to hear from you before we go to the Q&A section.
Sure, Sunil. A very good evening to all of you. If we look at India's story, it will be fair to summarize that right now we are oasis in the global desert. Things are going quite badly in global scenario, and India so far has remained immune from the global turmoil. If we look at global scenario, IMF believes 1/3 of the world will go into recession. India won't be part of that 1/3. In US, 1 in 6 family is behind in payment of utility bill. They are unable to pay their utility bill on time because they have problems of savings. They are not able to meet their budget because of higher inflation. Then clearly there is a challenge there. In India, young men live with their parents out of love. In US, young men living with their parent has increased in recent times out of compulsion because home buying has become expensive. In China, their biggest tech banker is missing And the company has recently issued a press release saying that we don't know where our CEO is. Now, normally such press release comes when CEO is taken away by the government. In UK, expired food label are not removed from the food products, but those food products are actually given to people who doesn't have money. So we are in a world which is in a very, very tricky situation, precarious situation. In that context, overall, India has done well so far. Did you know that 6 out of top 10 fastest growing cities of the world were in India last year? That's CY22. Bombay, Delhi, Kolkata, Chennai, Bangalore, and Hyderabad. They were 6 out of top 10 fastest growing cities of the world. Now, we do know that there are many cities in India where what they actually do is not necessarily disclosed in the numbers. It wouldn't surprise me if in real we're in India. The state of Maharashtra, where I belong, today their GDP is same as whole of India's GDP in 2005. In 16 years, Maharashtra has reached where yesterday India was. In 2001, UP and Uttarakhand were combined. Today, UP and Uttarakhand combined is equivalent to 2001 of India. Tamil Nadu, Karnataka, Gujarat are equivalent to 2000 of India. In 15 to 20 years, these states have become as big as yesterday's India. If we continue to work as hard, over next 15, 20 years, can these 5 states become as big as today's India? Somewhere in 2038 or 2045, can Karnataka be a $3 trillion GDP state? Well, if you keep on working like you have worked in last 20 years, that's bound to happen. Now, if 5 states of India over next 15, 20 years become as big as today's India, you can imagine what our size will be, what our growth opportunity is. Your states are doing well, your cities are doing well. And the third component in that chain is companies, corporate India. We have seen TCS, Infosys, Wipro, HCL Tech Mahindra, and other companies becoming global leaders in IT services. We have seen Cipla, Dr. Reddy, Lupin, Sun Pharma becoming global leaders in generic medicine. We have seen Bajaj Auto, TVS, Hero becoming global leaders in two-wheelers. Corporate India is now no longer restricted to national boundaries. They are becoming globally competitive. And this is best illustrated by a cooperative society called Amul. We all know Amul for the catchy advertisements they make and the milk they produce. But very few people know that Amul is India's largest FMCG company with 61,000 crore turnover. It has more turnover than Hindustan Unilever, which has global brands, which has best of the talent. In this year's annual report, Amul is targeting that they will become world's largest FMCG company by 2047, which in today's terms will be in 18 lakh crore. Now one can say this looks too ambitious, but please remember in 1970, India was producing 16% of Europe's milk production. Thanks to Amul, today we are producing 150% of Europe's milk production. We could grow from 16% of Europe to 150%. Why can't Amul grow by same work from being largest FMCG company in India to be the largest FMCG company of the world? Effectively, if you look at India, cities are doing well, states are doing well, corporates are doing well. The country can't be far behind. Why do we feel that going forward, growth will sustain? One, in the past, China, Japan, South Korea, Taiwan, every country outperformed India because they had better infrastructure. Our infrastructure creation was not keeping pace with the need of economy. Our airports, railway stations, highways, port were always choked. But now things are changing. From 1947 to 2013, what we built is getting replicated between 2014 to 2024. In 2013, we had 82,000 kilometers of highways. By 2024, we'll have 165,000 kilometers of national highways. In fact, I heard Mr. Gadkari speaking, target of 2 lakh kilometers of national highway by 2025. That means 2024 number could be higher than what we are estimating. We had 70 airports by 2013. Today we have 140 airports. We had 21,000 kilometers of railway track electrified in 2013. Today we are at about 52,000 kilometers. We had 50,000 medical seats in 2013. Today we have 95,000. By 2024, it will be more than 1 lakh. We were mining 600 million tons of coal in 2014. We will be a billion-ton coal miner in 2024. You look at port handling capacity, it will double between 2013 to 2024. We had 225 gigawatt of power in 2014. Will be 435 gigawatt of power in 2024. So effectively, national highways, port capacity, airports, power, coal mining, medical seats, electrification of railway track, whichever parameter of infrastructure we peak, India is building between 2014 and 24 what was built between 1947 and 2013. Now, this infrastructure will increase productivity. It will make us competitive globally. And hopefully, it will create another orbit of growth. While the long-term story of India does look good, does that mean that we don't have challenges? Answer is absolutely no. There are a few things which we need to tackle right now. The one thing is bottom-end consumption. Your lifestyle, my lifestyle has not been impacted by COVID or inflation to a great extent. And this is reflected in SUVs having 1 year waiting period. This is reflected in air travel reaching double of last year. This is reflected in hotels getting full. If you today want to organize a marriage party, I mean, it's not the Jyotish's or astrologer's date which you have to worry about. It's the hotel which will be available. But at the same time, the consumption of our maid, our pune, our accountant, our driver has been impacted. Inflation, COVID, all those things have subdued consumption at the bottom end. For last almost 3 quarters, we were hoping that this will be the bottom, but the uptick is not coming through yet. Certainly, there is a need to provide support at the bottom end of consumption. The second thing is our trade deficit. Bearing last month, for almost a year, we were running trade deficit ahead of our means. We are importing far more than what we can afford. Last month was the first month in more than a year where imports came down and trade deficit came within reasonable range. We can't keep on spending money for importing things. The most important thing for economy will be the reform mindset of the government. Everyone knows that government has no business to be in business. Whenever they have run commercial business, it's by and large incurring losses. MTNL at one point of time had bigger market cap than Reliance Industries Limited. Today, it is seeking more than 1 lakh crore bailout. Air India was one of the finest airline in the world. When it got nationalized, the downfall started and government had to inject 70,000 crore to keep that elephant flying. With Tata's, hopefully things will change. But Air India divestment can happen only after government contributed 70,000 crore there. It couldn't happen when Air India was monopoly of India's sky. So we have challenge on subdued consumption. We have challenge on current account deficit. We have challenge on reform mindset of government, which ensures there is ease of doing business, ease of doing investment, etc. But then all countries have their challenges. We are relatively better off vis-a-vis others. Now, how do we convert this into market? I don't think so. Most of us will have debate about India moving forward. Our debate will be about speed. Will we move faster? Will we move slower? And for market, direction is important, but speed is equally important. We believe this is market which is fairly priced from our historical average. We generally trade at about 18 times 1 year forward. Currently, market is probably 19 times 1 year forward. So not significant premium to our long-term average. We believe there are events which will continue to shape market. Tomorrow will be first anniversary of Russia-Ukraine invasion. When it started, it impacted energy prices, it impacted food prices, it impacted fertilizer prices. The war is not yet over. Will there be escalation, again impacting energy, food and fertilizer prices? Then our markets will suffer. Will there be de-escalation, easing of pressure on energy, food and fertilizer? Our markets will move ahead. US Fed is expected to raise interest rates. If you are going to get 5% in US fixed income, why do you want to invest in emerging market equities? The extent of rise in US interest rates will have direct impact on how much foreigners invest in Indian market. Oil prices always remain important to us because we import $100 to $150 billion of oil. In May 24, there is a central election, And before that, there are 9 state elections, including Karnataka. Results of those states will determine what's going to happen. Central election results, if there's for the expectations of the market, then we could. But if there is a shock like 2004, markets could correct. If there is a surprise like 2009, then markets could rise over next 18 months, which will impact market from US Fed to energy prices to Russia, Ukraine to central election. We believe this is the market where you have to buy on dips or buy on correction. This is the market where it makes sense to keep some cash in hand so that you can take advantage of correction. One can always ask, if markets are likely to correct, then why don't we sell everything and then buy? Well, don't make that mistake, because events can be positive also. If tomorrow Russia de-escalates, Fed starts cutting rates, market is confident of. This is the market where you maintain neutral allocation to equity. This is the market where you keep some cash to take advantage of correction. This is the market where longer term investment is necessary. From a sector point of view, in this budget, infrastructure allocation has gone up to 10 lakh crore. And more importantly, because of general election, there will be focus on speedier execution. I'm sure you might be seeing in Karnataka, Bangalore, faster execution, higher allocation, faster execution, infrastructure, consumer set bottom end. And as I mentioned before, there is subdued consumption there. Money in the pockets of consumers. Put together, consumer stock should do well. In the run-up election, as they move from subdued consumption side, interest rates are nearing their peak. They haven't peaked, but they are nearing their top. And this is time to start looking at longer duration papers. You can look at gilt funds, bond funds, longer maturity, debentures, bonds for your allocation into fixed income. Overall, next 12 to 18 months, our economy will do well as we have built infrastructure, as momentum is in favor of India. The markets, even though economy is doing well, will be volatile. Events like Ukraine, US Fed, general election results will continue to cast their shadow on our market. But every correction is a great opportunity to buy into India growth story. Infrastructure and consumer sector should outperform the market in the few quarters to come. On fixed income, it is time to build longer maturity in your portfolio. By and large, this is the year for disciplined investor with moderate return. And hopefully next year, with the new government in place, we will see better days in terms of return. With this, I'll end my talk, but happy to take your questions.
Sure. Thank you, sir. Just want to understand your view in terms of the market cap perspective, like large cap, mid cap, or small cap, which how as asset allocation should be in terms of next 3 to 5 year perspective allocation.
Sunil, they large, mid, and small are almost trading in equilibrium. They are like the perfect planet. Everyone is in right place. So what we are saying is that there is no aggressive call in terms of let's be overweight large cap or overweight small and mid cap. In the correction, normally small and mid cap falls more than large cap. So if there is a correction, buy small and mid cap. Otherwise, remain in multi-cap category, some large cap, some mid cap, some small cap. Today, there's no aggressive call in terms of going into one, cap versus another.
Okay. Sure, sir. So another question, which like most of our clients and our investor do goal-based investing. So especially from retirement planning perspective, what would be your advice that someone who is planning, looking at from next 5 to 10 year perspective to build a corpus, how he should plan?
So Sunil bhai, one, instead of saying that my son or my daughter will be my retirement corpus, it is far better to have financials as your retirement. I'm sure everyone's son and daughter are very good and they'll take due care. But sar utha ke jio is very, very important. In order to build financial security, you require three things. One is a regular investment. There is track record of SIP over 5, 10, 15, 20, 25, 30 years where people have made double-digit return. We have a saying that little drops of water make ocean. The same thing is visible in SIP, which is regular investment. The second thing is long-term investment. When I started my career, India was $300 billion market GDP and $300 billion market cap country. And I'm rounding off the numbers. In about 3 decades, we have grown 10x. $3 trillion economy, $3 trillion market cap in 2021. Over next 8, 10 years, it will double from here. $6 trillion market cap and 6. Now, whether that happens in 7 years, 10 years, 12 years, that could be the debate. But one day will it happen? There can't be debate about that. Most of the guys are convinced it will happen. What we saw in last 30 years, we are going to see in next probably 10 years. Now, don't get me wrong. 3,000 over 300 is 10x growth. 6,000 over 3,000 is just 2x growth. So it's not the percentage return, but it's the absolute opportunity which I'm talking about. Next 10 years, absolute opportunity of making money is as good as last 30 years opportunity of making money. Now, if you take such view, you'll be able to withstand volatility. You'll be able to withstand correction. So be a long-term investor, be a member of India growth story, and ride out the correction, ride out the volatility. The third and the final thing is discipline. Now, we all know equity will do well over a longer period of time, but we must survive in the short term, see the long term. Everyone has to invest based on their risk. If you are conservative, have less equity, your returns will be lower, but that's fine. If you are aggressive and take risk, you will be able to withstand volatility. So in simple words, regular investment, because little drops of water make ocean. Disciplined investment, because you should not put all eggs in one basket. And be a long-term investor, because in the short term, you don't get mango, from a mango tree. You have to wait for 12 years. So these are the 3 things needed for building your retirement corpus.
Sure. Another questions which normally investor comes back, that whenever they have a lump sum funds, especially in a market scenario like current where things are not very stable, but not very uncertain also. So how, as an investor, should look at their allocation if they're looking at from a 5 to 10 year perspective, the investment allocation?
So good news and prices never together. When everything is good, prices will be high. When things are bad, prices are low. So one has to catch the falling. Now, allocation is first based on your risk profile. Are you a better like Surya Kumar Yadav, who will hit every ball for a four? Are you a batsman like Rahul Dravid, who will take his time to build his inning? Depending upon your risk profile, conservative, average, aggressive, super conservative, whatever be the case be, please build your portfolio according to your risk profile. Second thing is your investment objective. Yes, I am conservative investor, but if I'm investing for my retirement, I need to have some equity allocation. Yes, I am very aggressive investor, super aggressive, but if I'm only investing for 1 month, I can't put money in equity, even if my risk appetite is high. So you reconcile between your risk profile and your investment objective to arrive at the right portfolio. A portfolio which is balanced across debt, equity, real estate, gold, and offshore assets. This allocation needs to be maintained through regular investment and some amount of profit booking or loss averaging, as the case may be. This thing has to be repeated time and again. Understanding yourself, setting realistic investment goals, building asset allocation, keeping in mind long-term investment, disciplined investment, and regular investment will create financial security for investors.
Sure. Yeah, and one question just came out, like which are the sectors where we can see that will have a negative impact if you look at the way the inflation crisis or Russia-Ukraine thing, if it continue. So from a next 3 to 5 year perspectives, if you look at what are the sectors where investor needs to be a bit cautious, like the way like PSU banks have seen recently rally. So like that, there are sectors in metals also had a good amount of rally. So sometimes investor get caught at the peak. So I want to take your view that where investor needs to take a call and move out from the sectors, and what would be the ideal strategy?
See, India is a rising tide. Rising tide lifts every boat. But those boats which have a hole in them, they don't rise. Is the hole in the boat from a point of view? It's misgovernance. If the promoter, if the management of a company does not care about your governance, does not care about minority shareholders, then don't invest in that company. More than the sector, the important thing is governance of the company. Is company management taking good care of business? Care about their responsibility to minority shareholders? If yes, then that is the company which is worth investing. Sectorally, there are few sectors where we by and large believe governance standards are poor, are real estate, public sector undertakings. BPCL, HPCL, IOCL are great companies, but because of their ownership, when oil prices go higher, they buy oil at 100 and sell diesel petrol at 90 rupees and incur 10 rupee loss. Now, It might be good from a government and country point of view, but it is not good from a shareholder point of view. In real estate, cash transactions are there in many parts of India, in land acquisition, in building approvals. Now, whether those cash will come to the company or go to the promoter, who knows? So by and large, we have been very, very careful investing in real estate and PSU sector. Now, of course, with that kind of approach, you may end up missing the PSU bank rally which happened. But it's better to be safe than be sorry.
So another thought process normally as an investor, they have that value of growth, which is going to drive the market, like especially when now interest rate scenario is like on the peak side of that. So is there any change that value will start going not further than growth will take? So like last 1 year, especially growth have seen some sort of a slowdown compared to value started doing good. So as a style, what will be the directional view from a next 2 to 3 year perspective? Which style of funds means as a approach will do well?
Day after night comes, night after day comes. पूनम के बाद अमास आती है, अमास के बाद पूनम आती है. This is the cycle of the nature. Market भी वैसा ही है. Sometimes value philosophy works. Sometimes growth philosophy works. When liquidity is high, interest rates are low, risk appetite is high, growth will work. When interest rates are high, growth is low, risk appetite is bottom, then value will work. As an investor, do we have ability to be in value when value is running and move into growth when growth is running? Answer is no. If I'm coming from Mumbai to Bangalore, before me, many flights take off to Delhi, Kolkata, Ahmedabad. I have to sit in my plane and wait it out. After a few flights have left to various places, my flight will take off and it will land me in Bangalore. But if I jump from the plane which is tending to one which is moving, instead of reaching back, please follow the discipline. Growth, value, they are all norms. They are all catchy phrases. Your objective is to follow disciplined asset allocation. Keep something in value. Both will come handy.
And last question, which we would like to have it from a India market perspective. Two things. One is from a risk part, like if US come to the receiver, most of the investor have this question that okay, if US in recession, how the globally markets are going to be? Because most of the times, US market, globally markets are linked with the US economy. And secondly, from a next 10 year perspective, what would be the ideal equity return expectation from an investor point of view where we can see as a whole?
So one, Sunil, what is unknown to the market when that happens, market corrects big time. For example, in Feb 20, if you had asked me, Nilesh bhai, COVID mein kya hoga, I would have said nothing. But when COVID actually created lockdown, our markets corrected from 12,500 to 7,500 because market had not priced in lockdown risk due to COVID. Now, how many of us are aware that US is likely to get into recession? A lot of us are aware. So if what is known to the market happens, the impact will always be less. What is unknown to the market, if that happens, then impact will be far more. Market was never expecting that 9/11 will happen. But when that happened, it corrected because new set of risk had emerged. In my mind, US recession is unlikely. Fed is raising rates, but the growth is still quite positive. And I believe there will be temporary milder effect of US recession on Indian economy or Indian market. No material substantial long-term impact.